Please, who joined? Who is? We have a stranger in our call. Hello. How did this person join our class? How did this person join our class? We have a stranger. But okay. We are
Who is Amokwe? Maybe should.
hello. How did you get this link? So okay.
Or is it Miss Sharon that changed her name?
That's what I'm like because this link is
Because that is the only group. we send it.
okay. That's what okay. Okay, Miss is Miss Afalashade. Yes. I've noticed her network is just coming. So she just messaged me now that she's the one. Okay.
Oh, okay.
So yes, okay, no problem. No problem. So let's start the class. Let's start the class, please. Yes, 41, agriculture. So this standard is one of the standard that is related to IAS 16. As I've said earlier, I said IAS 16 has a lot of standards that are so related to it. So IAS 41, which is agriculture, this is a standard that was prescribed by IASB. The standard relates to agricultural activities. So to people like to accountants that work in the agricultural sector, IAS 41 is the key standard. So IAS 41 talks about biological assets. So the first thing I would like to just introduce to this, please, I want to ask a question before we start. If I have an inventory, if I have an inventory and I need a standard that will guide me on inventory, please, which standard am I going to use?
IS2.
IS2. Thank you, ma. Thank you very much. So IS2 is the standard when I have an inventory. Now, this is okay. This is the breakdown I want to just give before we start. When I have an inventory that does not have life, when I have an inventory that does not have life, I'm going to use IES2. But when I have an inventory, inventory is what? Inventory in line with IES1 are assets held for sale in the ordinary course of business. When I have an asset that is held for sale in my ordinary course of business, it's called an inventory. Just like we know, I have a business, I'm selling cars. In my financial statement, cars are my inventory, right? So that is it. So the question I'm now asking now, where I'm going to now, if I have an inventory that has life, that inventory has life, I'm not going to use IES2. I will use IES 41. That is, what we are now going to conclude on is that if I have an inventory that have life, I'm going to account it with IES 41. But if I have an inventory that does not have life, example, I have uh, cars, real estate properties that I have in my ordinary course of business, it is IES2. So to cut the long story short, IES2 and IES 41, they are very, very similar. And if you can agree with me that IES2 is very, very close to IES 16. It's very close to IES 16 because when I have a car and I'm using it for administrative purpose, that car is what? That car is a PPE. When I have a car that I'm using for administrative purpose, that car in my financial statement is a PPE. But when I have a car that I'm selling in the ordinary course of business, that car is an inventory.
Invent.
And that is what I want us to understand. That is the problem of professional level. You need to understand the standard deeply. And the standard, they are not going to tell you that, in line with IES 16, kindly address this issue. Kindly advise the company how the accounting treatment. They will just give you a scenario. So you are the one that will tell the examiner, okay, this is IES 41, this is IES 16, this is IES 40. So this is the introduction of IES 41. Now, I think we can now start the class now. So, Mr. Falasha, but you want to say something?
No. I'm only agreeing with you.
Okay.
Thank you.
So, you are welcome. So now let's start biological assets. So the first thing IES 41 talks about is biological assets. And as I said earlier, okay, Mr. Falasha, do you want to say something? Are you trying to say something?
Yes. Good evening, sir.
Good evening.
Can you hear me? Maybe
Yes, I can. I can hear
as
you.
we go on, we can teach. Yes, maybe as we go on, I don't want to interrupt the class now. Maybe you can still explain more on the various plants
Okay, no problem. We'll get there.
relating to IS 41 and IS 16.
No problem. No problem. We'll get there. We get there. So now, biological assets, these are living plants and animals. Living plants and animal, biological assets. That means when you have an asset that is living, that is biological asset. So now, in line with the standard, biological assets are living plants and animals. And examples are what? Cattle, cocoa tree, rubber trees, fruit trees, chickens. And you agree with me that these are biological assets because all of them, they has life. They are living things. They are living assets. So now, to move very faster, let's move to the key aspect of IES 41, which is classification of biological assets. Biological assets can be subdivided into two. We have bearer biological assets and consumable biological assets. Bearer biological assets and consumable biological assets. So now let's pick it one after the other. Let's pick it one after the other. Okay. Now, bearer biological assets. It is very, very simple. Just by the name bearer, these are biological assets that bears, that means that produce another biological asset. These are assets that bears another biological asset. Then we now have bearer animals and bearer plants. If you remember very well, the definition of biological asset, these are living plants and animals. So when we are talking about IES 41, you are talking about both plants and animal. So when you are classifying to bearer biological asset is subdivided into bearer animals and bearer plants. And bearer animal, they are very straightforward. These are animals that bears another animal, like goats, pigs, cows, chickens, etc. But bearer plants, we have cocoa tree, mango tree, palm tree, and the likes. These are perennial plants. If you remember during our secondary school, we are all accountants now. And when we are in secondary school, we did biology. Biology said we have three classification of plants. We have annual plants, perennial plants, and perennial plants. I don't know if I can still remember all those things. So annual plants, a plant that can use only 1 year, perennial 2 years, then perennial, which is more than. So now bearer plants. Now bearer plants, what's the definition of bearer plant? Bearer plants are biological assets, which are plants, biological plants that use a lot of years, that produce, after producing, they are going to, after harvesting, they continue to produce for a long period of time. An example is cocoa tree, mango tree, oil palms. they are fruits, and like they are plant that goes for a long period of time. And this is where I'm actually going. Burial plant is not within the scope of IAS 41. Formerly, it was within the scope of IAS 41. And if you remember very well, when I was taking IAS 16, I said it, that burial plant, in line with IAS 16 revised, burial plant should be classified as PPE. Why? Because it meets the definition of PPE. So if you want to account for burial plant, you are going to account it in line with IAS 16. We are not going to account it in line with IAS 41, although we are still coming there. I'll try to break it further when we get to the burial plant. But burial plants should be accounted for in line with IAS 16. And what does IAS 16 talks about? It talks about recognition of PPE. It talks about measurement of PPE. At initial measurement, burial plants should be measured at cost, right? Right? If you remember very well, burial plants are measured at cost, except for government grants. Except for government grants. That means when you acquire a land, you now plant, you do plantation, then it is a burial plant that you use that land for. So you are not going to account for it at initial measurement. At cost model, you are going to use fair value. If you remember very well, we discussed about it. But let's move on. Burial plants, very straightforward. They are animals or plants that bears another plant. When you have mango now, I remember during a period of April, March. Is it March, April? In our first semester then, that's when they usually mango. You drink mango, drink mango. Mango will now go. Next year, mango will come again. So they meet the definition of IAS 16. So if we move further, we'll move to consumable biological asset. Just by the name, consumable biological asset that is held for consumption, that we consume. Then we have consumable animals and consumable plants. Consumable animals, animals that we eat, cows, goats, fishes, chickens, and the likes. So why consumable plants? These are examples of annual plants: maize, tomato, yam, potato, and the likes. So this IAS 41 is a very interesting standard, because these are something that we know very well that, okay, this is a burial plant, I know this. But the most important thing is that for you to say a biological asset is a biological asset, they have one characteristics. And that characteristic is where we are moving to. The standard talks about the characteristics of a biological asset. Biological asset goes through biological transformation. They go through biological transformation. That means number one is growth. Number two is degeneration. Number three is production. And number four is procreation. So now let's pick it out one after the other. IAS 41 also is a very short standard. A very, very short standard. Now, where we are going to make sure that in the exam that the examiner can discuss about is when we talk about the measurement. Talk about measurement and recognition. However, all these biological transformations, they are characteristics of biological assets. Number one, for you to see a biological asset is an asset, is a biological asset, they go through growth, which is the increase in size and weight of biological assets that leads to qualitative changes to a biological asset. That means a baby, example is a baby chick grown into a grown chicken. That's biological asset. They go through growth from just an example to when we talk about biological plants. When a mango is just fruiting, you see that the mango will, from small like this, the mango will be growing, then it will be green, then it will now turn to the normal, maybe yellow or the likes. So that's the first one. Then second one is degeneration. Degeneration is the decrease in size and weight of biological assets that leads to qualitative changes. So it happens due to old age or illness. Then we have production, which is the process of producing another non-living things. So the difference between production and procreation is that there are some biological assets when they produce non-living assets. That means they produce non-living biological assets. That means milk from cow, milk from cow. So the cow produce milk, and milk is not a non-living. So that is production. There are some assets that produce, but procreation is where an asset, a biological asset, produce another similar biological asset, another biological asset, another similar one. So, so a living asset example is an ewe that give birth to a lamb, a cow that give birth to a what was the baby of a cow? I've forgotten now. Imagine I work in an agricultural company for close to a year. So all these names of these animals, I know them. Mm. So, but just let's move on. Let's move on. Let's move on. Let's move on. So now, recognition criteria. Recognition criteria uh, for biological assets, and which is the key things. When the question comes out, biological assets comes out even in ACCA, biological assets comes out in written part. When you see calculation aspects in ICANN is if in fact I've been checking. I don't know, maybe when we if you can quickly finish our class tonight, maybe you can check past question. But biological IES 41 is nothing to write all about that. They will now set a 15-mark question that you cannot get 10 of or 12. So now let's move to recognition criteria. When to recognize biological assets. So just like I said in IES 16, I said when you know the recognition criteria of IES 16, you know the recognition criteria of the remaining standard, especially tangible asset standard. So now look at the recognition criteria. Number one is that the entity must have control over the biological assets. The most important thing is control. Is control. Who can remind me which standard has this recognition criteria that the entity must have control? In fact,
Intangible
all the standards. Thank you. Thank you very much. So intangible assets specifically, you must have control. In as much as when you have an asset, in line with the conceptual framework, for you to say an asset is an asset, an entity must have control over the asset. However, in line with the standard, in IES 16, there is no control there. But IES 38 specifically discuss about state that an entity must have control over the intangible asset. So the first recognition criteria of IES 16, IES 41, which is very, very important, is control. The entity must have control over the biological assets as a result of past events. Then number two, it must be probable that future economic benefits associated with the biological asset will flow to the entity, which is the same as IES 16. Then the fair value or cost of the asset must be reliably measured. The fair value of the cost must be reliably measured. So now, measurement of biological assets. At initial measurement, if you remember very well, our IES 16, what's our initial measurement in IES 16? Please, can somebody remind me? Initial measurement in IES 16.
At cost.
Cost model, right? What about IES
Cost model.
38? Thank you, ma. What about IES 38? Initial measurement of IAS 38. Can you remember?
Is it cost?
Is it cost? I will
Of
just did IAS 38 too.
fair value.
Fair value. Guesswork. Guess. You are guessing for me.
Yes, I'm guessing.
IAS 38 is different. I said, when we did IAS 38, I said it depends on how you acquire that intangible asset. That I said, intangible asset acquired in a business combination will be fair value. Intangible asset acquired not in a business combination will be at cost. Intangible asset acquired in internally, which is development cost, it will be at cost. There are like 5 of them like that.
That's why we're forgetting it. It's confusing.
That's why, I know that's why forget that's what I said. That you can't read standard once, so that's it. You cannot read it once and understand it once, so you have to be reading it at least every week. There are 7 days in a week. Once in a week.
The same thing every week.
That's why you understand standard.
Yeah.
That's it too. And the more you are reading it, the more it will be sticky. And as an accountant, you have to use it. And that is why you are not losing anything. I work in an accounting firm now. I prepare financial statement of clients. So if I don't know the standard of fund, how will I work?
Happy.
So I have to be. So that is just it. But the more you are reading it, learning curves will come in. Like IAS 16 now, maybe you use 10 minutes this week. By next week, it will be 8 minutes. By next week, it will be 7 minutes. The learning curve will be reducing the time until now. So, and the problem of standard is that in the exam, we don't know the standard ICAN we bring. You don't know. That is it. People will just come, Mr. Hunter, which standard can I don't know. Even myself, I don't know the standard. So that is just it. So at initial measurement, let's continue, please. At initial measurement, biological assets should be measured at fair value, less cost to sell. Biological assets must be measured at fair value, less cost to sell. Except bearer plants. Except bearer plants. Why? Why is bearer plant not measured with fair value? Why? Let me ask that question. Why? Why can't we measure bearer plants at fair value at initial measurement? Why?
Maybe because it's PPE.
Exactly.
It's ISCC.
Exactly. Thank you, ma. Because it is IAS 16. And they told us specifically that it should be accounted for in line with IAS 16. So at cost model, you are going to account it in line with IAS 16. You are not going to account it in line with IAS 41. And that is what the standard is saying the other time, that bearer plant should be accounted for in line with IAS 16 and not IAS 41. So when you are accounting for something in IAS 16, you are going to use cost model because that's what IAS 16 says. So, but we are in biological assets. Please, let's take note. All biological assets must be measured at fair value, less cost to sell at initial measurement. At initial measurement. However, IAS 41 now gives a clause that where the cost mode, where the fair value cannot be reliably determined, then you can now use cost model. That's the only clause. That when you cannot determine the fair value reliably, then you can now use cost model. But when you can determine the fair value reliably, please use fair value less cost to sell. So now, subsequent
Can
measurements.
you cite example for us?
Okay, the example is very, very simple. We are going to do IFRS 13. IFRS 13 talks about fair value measurement. Fair value measurement. So fair value, the way we look at fair value is like somehow different. Fair value in line with IFRS 13 is the price that will be received to sell an asset or paid or to pay or settle a liability at a measurement date in a normal base, like in a normal market. That means when at a market that is fair. That is like, what am I even saying? Fair value is when you are measuring uh when you go to a place and you want to determine the price of something on a fair basis. That means without an let's say internal, maybe you know somebody or something. That is fair value. The price that is determinable in a market. That is fair value. So a good example is that when you want to buy a laptop in Lagos now, if you want to get the price of a laptop in Lagos, and I'm very sure you go to Computer Village. So Computer Village is an example of an active market. So IFRS 13 talks about active market. So when you are talking about active market, a market that you can determine a price easily. So in IAS 41 now that we are saying now, when there are some markets, I think I usually hear Kara markets. I think Kara market is either in Ibadan or in Ogun State. That's where they usually sell malu, all these cow, all these goods. When you want to buy a car or something, that's where you get. So you can use Kara market as an active market. You can use it as an active market. But what IAS 41 is now saying, in a situation where you cannot find an active market, that you cannot determine the fair value reliably, then you now use cost model. So that fair value, it is very, very important because that is the price the market participants are willing to pay. That is IAS 41. That is fair value. So hope that answers your question, Ms. Folashade.
Yes, please. Thank you.
Okay. So that is initial measurement. At all times, we must use fair value. Fair value less cost to sell. Now, let's move to subsequent measurement. Now, subsequent measurement, biological assets should also be measured at fair value. Less cost to sell. Less cost to sell. The same thing for initial measurement and the same thing for subsequent measurement. The same thing for subsequent measurement, the same thing for. So now there is not something I now want to say. It is actually a gist. Now let's assume that I buy a cow. Now we know we are in which month now? August, Abby. We are in August.
Yes.
I buy a cow for 500,000. That's the cost of the cow. Now, let's now see we are in next year, March. Is it next year, March, May, April, May? Doing a layer. How much will that cow worth? If I bought a cow now, 500,000. Do you know that the fair value will have risen, right? The fair value will have risen. The price of that cow will have risen. So that's the reason why IAS 41 usually says that when you want to determine you want to measure your biological asset, please use fair value. Even when you buy it 500,000 today, Do you believe that tomorrow you are not going to sell it 500,000? You can sell it 600, 700,000. So to reflect the actual price of that biological asset, that's the reason why IAS 41 says that you should determine at both initial and subsequent at fair value. Because so that is just it. That is just it. Because it really reflects the price of that biological asset. So, but changes in fair value should be recognized in P or L. Do you remember very well that if I measure my biological asset this month, I discover that it is 1 million naira. That cow is very big, 1 million naira. Next month, if I measure it, is now 1.1. The difference is 1 million, right? The difference is 100,000. That difference is called changes in fair value. It's called fair value gain. Fair value gain. Fair value gain. IAS 41 says that we should recognize it in the P or L account. In the P or L account. It is called fair value gain. That changes in fair value. It is called fair value gain. Now, there's one funny question I now want to ask. When a cow give birth today, please, what will be the fair value of that cow? I want to laugh this night. I want to laugh. That's how my ACC lecturer laugh off. So let me laugh too today. What will be the fair value of that cow? The cow they just gave birth today. You know, IAS 41 says that at initial measurement, all biological assets should be measured at fair value, less cost to sell. So what will be the initial cost? What will be the fair value of a cow that they just gave birth this morning? What will be the fair value? I'm listening at Miriam, Auntie Diola, I'm listening.
It's the baby that the cow just give birth to. That is the fair value.
Okay, the baby. Let's say the baby is a boy. The baby is a boy. Okay, how much is the fair value of that baby? What would be the how much? Just what would be the amount? What would be the fair value? How much?
Okay, so I think the fair value will be the amount that we can get that baby for in the market.
In the market. Okay, that's a great try. That's a great try.
What if we are not selling the baby in the market?
Is it possible? That's why I say I want to laugh.
No, what I'm saying is that definitely there will be other people that will have babies, as in goat babies, in the market too. So you might just like, okay, how much will your own baby will be, as in goat baby will be going for? How much do they sell goat baby in this area or in this market?
That's why I said I will laugh this night. That say I'm not asking that. Is it possible we sell that baby? Baby that I just want, a cow that I just give birth this morning.
Yes, it's very possible, sir.
It must be
It's
with the
possible.
mother. You'll be giving him milk.
No. People need to say all these what's it called? All these dogs. They need to sell them now at birth. Once they're giving birth, they will carry the baby.
How is the baby going to? The baby will not survive.
It will die if it doesn't have milk.
That's what I guess. What is saying that okay. How is he going to survive if you separate him and his mother? Let's say him now is a boy. So what will be the fair value? That's the question. Mr. Falaja, do you want to say something? What do you think? It cannot be determined, Abi.
Yes.
IAS 41 says it can be determined.
You carry it with the mother together.
So actually, that's what IAS 41 now address. Like all these people that set standard, they think very well, because when you look at it, what will be the fair value of a newborn baby? Because you cannot separate it from his or her mother, because that newborn baby is not going to survive. So what IAS 41 is now saying is that, how are you going to determine the cost? The cost is that you are going to determine the fair value of that mother before birth. Before that cow give birth, when she was pregnant, you just determine the fair value. Now, after the cow now give birth again, immediately she give birth, you determine the fair value. The difference in their fair value
Is the baby.
will be the cost of the baby, will be the fair value of the baby.
Okay.
That's what that's
This
what
one
I
long.
in long, Abby. In long, like in long go. So that would be the fair value of that newborn baby. So it's a technical thing that if you get to the exam or you just seeing different answer, in fact, examiner will be laughing at, this one, okay, he will sell it with his mother. What if I don't want to sell with his mother? What would be the fair value? So that is, so in line with IAS 41, they call it dim costs. It is called dim costs. I'll add it to the note here. It is called dim costs or surrogate costs. Surrogate costs. Because so on day one like this, that would be the fair value of that baby. So as the baby is growing, following his mother, following her mother or his mother, then you will now be like determine the fair value for month 1, month 2, 6 months, 1 year. Then you'll be recognizing the fair value changes in the P&L. So that's what IAS 41 says about that. So now let's continue. Please don't let us forget, the most important aspect of IAS 41 is this place: recognition criteria and measurement. In any question that I can want to set, when they want to set theory aspect, it is this part. Please let's take note of this part, this recognition and measurement of biological assets. So IAS 41 now says that, if you remember very well, when I talk about IAS 20, accounting for government grants and disclosure of government assistance, I said at initial measurement, the grant should be measured at what? At fair value, right?
Yes.
At fair value. But please let's take note, in IAS 41, it should be measured at fair value less cost to sell. Please, you have to add that less cost to sell to it, because this is a living asset, an asset that is living. Because for you to sell an asset that is living, you have to move it. So, and that is why IAS 41 says that it should be measured at fair value less cost to sell. Then IAS 41 give us the examples of estimated cost to sell, which is cost of transportation to market, cost of advertising, cost of commission. Those are the examples of estimated cost to sell a biological asset. So example, the fair value of a biological asset is 500,000, and the transport or the advertising or commission cost will be, let's say, 100K. So the fair value of that biological asset will be 490K. So please let's take note of that. Now, that's by the way. Now let's move to subsequent expenditure. When I buy a cow today, 500,000. Now feeding that cow, giving that cow drugs and the likes, what will be the subsequent expenditure? Are we going to capitalize it or expense it? That's another question. Do you remember very well? let me see, maybe we remember subsequent expenditure on PPE. Can we remember the treatment? What is the treatment? Are we going to capitalize or expense?
Capitalize.
Subsequent expenditure.
Yes, it actually depends if it's going to improve the
The life of the asset.
longevity of the assets or not.
Exactly. Exactly. Please don't let us forget. IES 16 says you can only capitalize subsequent expenditure on PPE when it prolong
The life.
useful life of the assets. It's prolonged. The estimated useful life of an asset is 10 years. We now bought a new engine. That engine will now prolong it to like 15 years or 20 years. IES 16 say we should capitalize it. We should capitalize that subsequent expenditure. Or when it increases or enhances the productivity of that asset. That means when the asset can produce like 100,000 units before. But as a result of the engine, although it does not prolong the useful life, but it makes it to be more efficient, the machine can now produce over 200,000 units of product. IES 16 says you should capitalize. So its subsequent expenditure can only be capitalized in those two instances: when it prolongs the useful life of the asset and when it enhances the economic performance of the asset. Those are the two instances. Any other subsequent expenditure will be expensed in the financial statement. So now, when we are now talking about IAS 41, in fact, this scenario actually happened to me in one of my former company. We deal with agricultural produce. We have cows, we have agricultural produce and the likes. So whenever we buy cows now, those cows, like we have pregnant cows, we have sick cows and goats. Whenever they are sick, they don't go out for grazing. We have sick bay for them. So whenever they are in the paddock, we are going to buy feed for them. And their feed is if you their feed, when you want to buy a feed that will take them for 1 month, I say 1 month, 2 weeks alone, you'll be spending over 200,000, 300,000.
Hmm.
For like, it's just like you said, Abi, that's when I saw that film. So we now ask ourselves, that, okay, well, this subsequent expenditure, are we going to capitalize it or expense it? What are we going to do? We go back to the standard, go back to IAS 41. IAS 41 now says that it depends on the policy, the accounting policy on the organization. If you like, you can capitalize it. If you like, you can expense it. So IAS 41 does not prescribe the subsequent expenditure. It depends on the accounting policy of the organization. As a result of that, IAS 41 now says that even though you capitalize or you expense, it will be the same. It will result to the same in the financial statement. Although how it's going to be presented will be different. Because when you capitalize, what are you going to do? Let's practicalize it. When you capitalize, all that subsequent cost is going to your balance sheet, right? Statement of financial position. You'll be capitalizing. But what IAS 41 is saying that you are going to determine fair value changes, right? So when you determine fair value changes, when you have a fair value gain, where is fair value going to? P or L? P or L. So when you expense to, where is it going to? P or L? So it's still the same. So it depends on the organization policy. So that is it. Now said, however, the policy should be consistently applied from one period to another in line with IAS 8. IAS 8 talks about consistency of accounting policy. Not that you capitalize this year, you now expense next year. You capitalize next year, you next 2 years you expense, you capitalize. No, it must be consistent from one period to another. That's IAS 8. So that's all about subsequent expenditure. So now let's move on. Let's move on. Let's move on. Now, fair value. There is no way, and that's why I said it earlier that fair value is very, very important when we are dealing with IAS 41. So definition of fair value in line with IFRS 13 is the price that will be received to sell an asset or pay to transfer a liability in an orderly transaction between market participants at the measurement date. In an orderly transaction, when we get to IAS 13, all these orderly transactions, they are defined. It means arm's length transaction. That's the English I wanted to use there. Arm's length transaction. Transaction that goes, that is carried out in an arm's length. That means in a fair way. That is orderly transaction. Market participants, the buyers and sellers in the market, those are the market participants. At the measurement date, the date in which you measure, fair value today is different from. So IFRS 13 requires that fair value should be determined in reference to a principal market. And IFRS 13 talks about the features of principal market, which items are traded within the market at are homogeneous. Willing sellers and buyers can normally find at any time. Prices are available to the general public. So that's the characteristics of fair value. So now a factor that determine the fair value of a biological asset. Factor that determine a biological asset fair value. The size of the biological asset, which is true. The health of the biological asset. The age of the biological asset. The gender of the biological asset. The gender. I learned that a male cow, a female cow is more the cost of a female cow is more higher than a male cow. Or is it a male that is more higher than a female? One of them is higher.
Female should be higher because it should produce more.
Exactly, it's female. In fact, they don't sell female. I remember then, we don't sell female. We only sell male cow. Because female they are going to give birth. But male, you just sell. Then the size, then the health conditions, the age and the likes and the quality of the biological asset. So those are the factors that determine. So the last aspect of IAS 41 is agricultural produce. And this comes from where? This comes from biological plants. You know, we have plants, we have animals. So the question is that agricultural produce are harvested from biological assets, which are plants. If you remember very well that when we have a plant, the plant is going to germinate and we are going to harvest, right? So when we harvest, what we are going to harvest from is agricultural produce. So this is where IAS 41 and IAS 2 relate. Now, when we have a tree, example, we have mango tree, we have palm tree, and the likes. It's going to be a biological asset. Why? Why is a mango tree a biological asset? Let me ask that question. Why? Why is a mango tree a biological asset? Then the mango is an agricultural produce. Why? It's a technical question, right?
So the question is not clear.
It's not clear. I said we have a mango tree now. A mango tree is a biological asset. But when we harvest that mango, when we pluck that mango, we pluck mango now, we harvest it. That mango is an agricultural produce. So why is a mango tree a biological asset and a mango an agricultural produce? Why?
Because mango tree is a bearer plant.
Is a bearer plant?
Yes.
Is it bearer? Okay, let's say it's a bearer. What about that one? What about the mango that we now harvest?
It's consumable.
It's consumable, right?
Yes.
So that is it. That's just it. So the mango tree is a biological asset, which is a bearer plant. Just like Mr. Folashade told us. That's just the simple answer. The mango tree is a biological asset. And the main reason why is what? Is that the mango tree is living. The mango tree is living. Why the mango that we harvested is not living again? That mango tree is still living. By next year, with rain, with sun, the mango will continue to produce mangoes. Every year, we'll be harvesting mangoes, right? We'll still be harvesting mango. So it is a living plant. However, the agricultural produce, which is the mango, that one is not a living plant. And that is the second aspect of IAS 41. IAS 41 talks about agricultural produce. Agricultural produce, these are harvested produce from a biological asset. An example is what? Wool from sheep, milk from cattle, pig foods, harvested sugarcane. These are agricultural produce. So then IAS 41 now told us that before harvest, agricultural produce should be measured at fair value, less cost to sell. Before harvest, before we harvest it, agricultural produce should be measured at fair value, less cost to sell. However, agricultural produce after harvest, it should be measured at in line with IAS 2 at lower of cost and net realizable value. That's the difference. Before harvest, should be measured at fair value, less cost to sell. After harvest, it should be measured in line with IAS 2 at lower of cost and net realizable value. So, and lastly, if we want to present a biological asset, what would be a biological asset what is it going to be in a financial statement? Biological asset. Is it a current asset or non-current asset?
Non-current asset.
Non-current assets.
Non-current asset. Please, let's be very, very careful. It depends on the biological assets. It depends. When you have a cassava now, a maize, let's say maize. Okay, let's say maize. Is maize a biological asset or not? Maize. Maize.
Maize should be consumable.
Maize is not a biological asset.
It's not a biological asset. Okay, well,
biological asset.
Maize.
Consumable biological
Is an agricultural produce.
It's an agricultural produce, Abby. So,
Yes.
is agricultural produce, is it not a biological asset?
So no, it depends.
That's
when you're talking about maize,
are
you talking about the plants or the maize after it has been harvested?
Exactly. That's where I'm going. So it depends. Before harvest, that maize is a biological asset.
before harvest. That means when the maize is on the field, when we have not harvested at all, that means let's say in few weeks, we are going to harvest it in few weeks or next month, it is a biological asset. It is a biological asset. You are going to classify it as a biological asset. However, after harvest, when we harvest it, we have now peeled that cloth, we have peeled everything. That is an agricultural produce. That is agricultural produce, and agricultural produce will be measured in line with IES2 after harvest. So it is very, very important we understand all this term. IES 41 is a very, very technical, but when you understand the key terms, it is very, very straightforward. Okay, please go ahead, ma'am.
Okay,
Go ahead.
thank you, sir. Please, I would like you to go for to the I think the first slide or thereabout, the first please can you go to the beginning
Page.
of the yes.
Okay.
Where we have various plants. Okay, it's
Yes,
fine.
yes.
Various plants and consumable biological assets. So now this is where I'm a bit confused here.
Yeah.
You know, you
Yes.
said various biological assets. They are PPE. Abi?
Bearer. Is it bearer animal or bearer plants?
Bearer biological assets.
Yes.
You know, we have two here. We have bearer biological assets, and it can either be
Yes.
bearers animals or bearers plants. And
Yes.
they are actually PPE. They are IS 16, not IS 41. Now let's now come to consumables. Okay.
Wait, let me
Okay,
now
so let's
quickly clear that.
That's bearer
Let
plants.
let me clear that. It is only bearer plants. Let me highlight it. It is only bearer plant that is PPE. Bearer animal is a biological asset. Consumable animals is a biological asset. Consumable plant is a biological asset. It is only bearer plants, and that's why I said it here that bearer plants are within the scope of IES. Only bearer plants. Only.
plants.
Yes, the rest they are biological assets. But yeah, go ahead.
Okay, I think no, I'm fine.
You are not
cleared
clear
it.
now.
Yes, thank you.
The rest they are biological assets. All those cow, goats, they are biological assets. They are the only one that is PPE is bearer plant. An example of bearer plant is what? Cocoa tree, mango tree, oil palm, because they are going to exist for more than 1 year, for a long period of time. And if you look at the examples, cocoa tree, mango tree, oil palm, orange tree, all those palm tree, they are going to use a long period of time, and they are going to produce future economic benefit for a long period of time. So that is why it is classified under the scope of IES 16. It meets the definition of an asset. It meets the definition of a PPE, if you remember very well. And that is the reason why it is a PPE, bearer plant only. The rest, they are biological assets. The rest are biological assets. So you are fine now, ma.
Yes, I am. Yes, I understand it perfectly well. I was a bit confused before that. We are doing repetition and it's not clear, but it's fine. I understand it perfectly well now. Thank you, sir.
Okay. You are welcome. You are welcome. So when I look at the past question, The question I saw in past question is like is somehow related to written part. Let's look at it. I think you can see it for like 10 minutes. Let's look at it. Let's see it together. Let me quickly find that question. It's somehow related to I'm on it already. I'll share my screen now. I'm on it already. In fact, I can only tested it twice. I can tested IAS 41 twice. Where is CACC? Question Yakpa. Question Yakpa. Question Yakpa. So, is this? I think it's May. Is it May 2019 or November 2019? Okay, I've seen it. I've seen it. Let me show my screen. So this is it. This question 7. Can you see my screen now?
Yes, what year, please?
It's November. November, is it May? May 2019. May 2019. I've been November 2019. One of them. So let's look at it together. They said, let's look at the question together. Agbin ye. Okay. Agbin ye. I know small Yoruba now. Agbin ye farms. Agbin ye in Yoruba means that we should plant and it will be well. Abi. Did I get it right? I'm correct small now, Abi. Please don't laugh me.
To plant successfully.
To plant Agbin ye. Don't laugh me. At least I know small Yoruba now. So Agbin Farm operates many plantations across Nigeria. The company recently acquired a freehold land in Benue for a total of 12 million naira. Please let me ask, that freehold land that they acquire, is it a PP or investment property?
Investment property, IS 40.
IS 40?
Sorry.
Please look at it very well. It is the farm operates many plantations. That means that farm is an agricultural organization. They carry out agricultural activity. They now acquire a freehold land for 12 million naira. Okay, let's read one more sentence.
As for administrative purpose.
Is it
what are they using for?
Is it administrative or production of goods or services?
Okay. That's what I mean. Yeah.
Yes, it's not administrative, it's production.
Of goods and services.
So, and when we acquired an asset for production of goods and services, it is a PPE, right?
Yes.
It's a PPE. So that's it. It's not an investment property. Only when we acquire an asset, which is a property, then we now do what? It is for rental purpose or capital appreciation. That is when it is an investment property. But since this organization operates and has so many plantations across Nigeria, then that's something is a PP. So let's move on. The trees we are planted with the company, incurring a cost of 4 million naira to March 31st, 2018. Now, the fair value of the plantation, excluding the land, was determined to be 16.4. Based on the management assessment. Now, let me ask, this plantation they are talking about, they gave us fair value. Is it a biological asset or PPE?
Plantation. What was planted there?
That's it too. That's what we asked, Abi. Yeah,
Yes.
let's continue. The company is expected to get produce from the plantation for a period of 20 years.
It's a bearer plant.
It's a bearer plant, Abi.
Yes. PPA.
Is a PPE. Since it's going to get produce for it for more than 1
20
year.
years. Mm.
Are we all together? Are we all together?
Yes, yes,
Yeah,
yes.
please let's take together. So the company is expected to get produce for a period of 20 years. The first year was done during the year 31st March 2018, and the fair value of the produce was 2.5 million. The company incurred a total cost of 600,000 to complete the harvest. Now, the company uses a cost model when possible. Now said required, discuss the accounting treatment for the above transaction, showing clearly the amount to be recognized in the profit or loss and statement of financial position. So let's assume we are in the exam now. How are we going to account for this transaction? How are we going to account for this transaction? How? Let's pick it one after the other. That freehold land that was acquired, that one is a PPE, Abi?
Yes.
That's a PPE, correct. And the planted trees incur operating costs up to 4 million naira as at 31st March 2018. Now, they now give us the fair value of the plantation. Now, should be in this question, we have agreed that it is a PPE, it is a bearer plant, Abi?
Yes.
It is a bearer, and as a bearer plant, and at initial measurement, bearer plant should be measured at what?
Cost.
At cost, Abi. So
Yes.
what would
As
be the
fair value, less cost. Eh?
at
Oh,
No,
bearer's plant. So sorry, at cost. At
Yes.
cost. Sorry.
at cost? So it's a bearer plant too.
It's
Please,
50. Yeah.
It's not a biological asset too. If it is a biological asset,
Biological
it will be a fair
assets.
value. It will be fair value. But this is a bearer plant. We are counted in line with IAS 16. So at initial measurement, the cost of the bearer plant will be how much?
12 million plus 4 million.
12 million plus 4 million. That land
Yes.
is a PPE.
Yes.
It is not a bearer plant though.
Yes, a PPA.
It's a PPE. It is not a bearer plant. So we must be very, very careful. That freehold land itself is a separate thing entirely. So that plantation itself, the cost will be the cost of planting. If you see that the fair value of that plantation, excluding the land, excluding land,
Yes.
was how much? Was 16.4 million.
Yeah.
So the cost of that
this question, the cost of that plantation is 4 million naira. The cost of that plantation. You are going to separate that land from it. You are going to separate that land from it.
I mean,
That
this
land
is not clear.
is not clear, Abi.
I'm
Now,
not
let me
really
explain.
clear.
Yes, let's take it one after the other. When I saw this question, I just laughed like this. That land, that field land, that's the first question I asked. That land is a PP. Is a PP. Now, they said on that land, though, trees were planted, Abi.
Yes.
Trees were planted.
Yes.
The company incurred an operating cost of 4 million naira. Abi,
Yes.
Yes.
the fair value of that plantation, excluding land, was how much? Was
16.4.
16.4.
Yes.
16.4.
So the fair value that they gave us is excluding land.
Yeah.
That's what we should take note here. Is excluding land. So if you want to determine the cost of your plantation, it must not include land. You must separate land from it. Or else there will be contradiction. There will be contradiction.
Shibi, they've stated that the fair value of the plantation is determined to be 16.4, and this 16.4 does not have the land included in it.
Exactly. And that is and that plantation, do you believe that that plantation is going to depreciate? Because it's going to produce for 20 years.
Yes.
Abi?
Yes.
So, but you remember that land is not going to depreciate too.
Yes.
So now the question now is that since they say we should account for this, we need to determine the fair value gain, the revaluation surplus, or revaluation surplus or deficit. So we need to compare costs of the plantation with the fair value of the plantation. So my question is that what is the cost of the plantation? Only plantation, no, excluding land, no, only plantation. So the cost of that plantation is that operating cost of 4 million naira. Mr. Folashade, are you there now?
Yes.
Yes, I am.
Okay.
It is that cost of 4 million naira. That is the cost they incur to plant that plantation.
Yes.
Don't let that land to confuse you. Leave that land separate, because the land will continue to exist for till eternity. It is that plantation you handle. So the cost of that plantation is 4 million naira. Then the fair value of that plantation as at the year end is 16.4. The difference between the both of them will give you the fair value gain.
Sorry, the year end. I'm saying 31st March 2018. Then the fair value, same date again. So was it a mistake or what?
No. This is a plan. Yes. It is a biological asset. And that is what I'm trying to clear. That plantation, they have not harvested to.
Yeah, okay.
They have not harvested. When you look at it, you think that okay, they have harvested. That it's supposed to be maybe 1 year later, or 2 years later, or 6 months later. No, they have not harvested. And that is what they call biological asset. It is still living. As it's still living like that, still growing, they can determine the fair value. So the fair value of that plantation is 16.4. And they have already incurred the costs up to that. You know, the cost you'll be incurring every day. They will be incurring costs every day. They buy seed, they buy track, they hire tractor, they do this, they do that. Up to that period, the cost is 4 million. Then the fair value is 16.4. The difference between the two of them is the fair value gain. It's a fair value gain. Then we'll determine the depreciation. Can I quickly show this in Excel?
Time has come. Time has come. Maybe I'll just show it later. I'll send the Excel to you. I'll show it. I'll send the Excel to you. I don't want this class to exit 10:30. I don't want the class to exit 10:30. So I'll send the Excel. Probably tomorrow night. I'll send it. But hope we are still together.
Yes. But me, what I'm thinking is that for us to know the cost before we even start separating, I was thinking that, okay, we'll add the land to the 4 million to give us the initial costs.
That's the normal thing you're supposed to do as a layman person. Whereas, no, land is a different thing. Land is a different thing.
So we're going to state them different. Okay. We're going to state them separately. Is exactly. It because we don't want to depreciate land, or because they're not supposed to be added together? That's what I want to know.
Exactly. Number one, why we are going to separate it is that plantation is a biological asset. It is living. While land is not living. Land is just on its own. That plantation is living, is a biological asset. But it is a bearer biological asset, a bearer plant. So you must not join it together. And that is how IAS 41, that is why you need to calm down. Or else, I'm a lot dark body, I'm a jumbo airport. Whereas it is a wow.
Sorry, Mr. Taufeeq.
Yes.
Mr. Taufeeq. Sorry, yes. I'm sorry for. I think I understand what Madam Falashade is trying to say. So now, let's look at it. The land, the freehold land, is PPE, ISCC.
Yes.
Okay, so the plants, the bearers are plants.
Yes.
Is IAS what?
The bearer plants should be accounted for in line with IAS 16, but it is not IAS 16. It is IAS 41, which is biological asset. It is living. The plantation is living. It's still growing. So I got to jump on more land to are separated.
You said bearers plants is
bearer
IAS 16.
Should be accounted for.
No, let's take it one after that. Bearers plants is IAS 16, Abi.
With bearer plant is a biological asset.
It's a biological asset,
but should be accounted for as IAS 16. Is that what
that is the point? That is it. You should not that it is because
we separated one by one.
Okay, no, wait. The 12 million naira is IAS 16. Should be accounted for as IAS 16.
Yes.
The what's it called? Bearers plants are the biological plants.
Yes.
Biological. No, what I want to know is that let's even leave the amounts now. That biological plants is a bearers plant, and you said that bearers plants should be accounted for as IAS 16. Abi?
Yes.
I don't know what you said.
But they should not be added together, Abi? Yes, you are correct.
But they should not be added together. But they are both IAS.
That's what
that's it.
They should not be added together, but they are both IAS 16.
Okay. Oh my God. You want to daru Abi?
No,
Don't let it
no,
get
no.
away.
I needed to be very clear. Sorry that
Exactly.
I was trying to explain. Sorry about that.
Yes. So this is it. Let me show you. Can you see that the land is separated 12 million? This is the beer plant Lope, which is that 4
But
million.
both of them are non-current assets, one by
Both of
one.
them are, but
Well,
different classification.
yeah.
Different
Okay.
classification.
We'll be separating them.
Yes, you separate it. Bearer plant is different from land.
Mhm.
Although all of them they are both PPO, but you must
Mhm.
separate them.
Uh-huh.
Okay.
That is it.
Okay.
You must separate them. All are very
Okay.
important.
Okay.
So
Okay.
that is it. Look at the cost. The cost of that plantation is 4 million naira. Depreciation
Mhm.
is 200,000. 4 million naira divided by 20 years, which is 200. This is the carrying
Okay.
amount.
Okay.
This is the carrying amount, 3.8.
Mm.
So when you get 3.8 carrying amount, this is the journal of your depreciation. You debit your P&L, you credit your assets. This is your journal.
Mm.
So this is your
Mm.
subsequent measurement. Cost
Mm.
minus depreciation, you get your carrying amount. You compare it with your revalued amount, which is 6.4. This is your evaluation surplus. Evaluation surplus is 12.6. So this is your evaluation surplus. You debit PPE, you credit OCI, fair value gain. So then this is your financial statement extract.
Mm.
Fair value
Okay.
gain, operating costs, depreciation, land, bearer plants, agricultural produce.
Mm.
So I'll try to break it down in an Excel to my fee.
Okay.
So I just say
No,
I can.
I've only gotten it now.
You have gotten
Okay.
it there. That's why I say I need to quickly show you. What if you? So, but all is well. All is well. Yes, the B part. The B is a written part. The B is a written part. And that's why I said IES 41 is actually based on written. Written lower. This is it. Megida PLC has ranches across the north where its cattle are rare. The company is quoted on Nigerian Stock Exchange under agricultural sector. The financial controller is not clear how to measure its cattle in the financial statement. According to IAS 41, advise the financial controller on how to measure cattle. So in the financial 5 marks. So this is a written part. What is a cattle? Is it a consumable bearer plant or a a bearer ba-
Bearer
a
animal.
bearer
It's
animal
a
abi?
bear. It's a bear animal. Yes.
The bearer animal. So how do we measure it? You just add
Fair
recognition
value.
criteria, then it should fair value less cost to sell
That's
abi.
supposed to sell, yes.
Mhm.
So is a cattle, which is is cattle a cow or ram? Still the same thing. So
Cattle or
this
cow?
that's why I said it from the starting that IES 41 is based on written. But if they want to
Mm.
test any calculation, it is based on recognition and measurement. So that is just it. That is just it. That's it. So any other
Okay.
question? Do you have any other question?
Yes. So then the consumable, is it consumable animal or consumable plants? That
Yes.
one will record this as current assets, right? Why the
Yeah. Where we
yes,
have
okay.
consumable animals.
Animals
Consumable
or plants
animals.
or
Consumable
consumable, okay.
animals are your there are those cow, goat, and chicken, abi.
Yeah.
Yes, yes,
They are
yes.
your they will be in your current assets because they are for
Current
sale.
assets.
Because you
Yeah,
want
for
to
sure.
sell
So,
them. Because
okay.
and anything you want to sell is an inventory. And that's why I said it
Inventory.
from the yes. When I have an inventory that has life, it should be accounted. It is a biological asset. When I have an inventory that does not have life, it's IES 2. It's IES 2. So they are inventory. They are inventory. Because we are selling it in our ordinary course of business. We are selling it. Except if we have that bearer animals, when we say that, okay, this bearer animal, we are not selling them. We want them to give birth. That's our motive. On day one, that we want them to give birth. So we will not put them under current asset. We'll put them under non-current asset. But it will be a biological asset too. It will not be a PPO. It will be a biological asset. But we'll just move them.
Please come again. I didn't get that.
I said biological assets.
Yes.
When we want to present them in our financial statement, for presentation purpose now,
Yes.
it is a biological asset.
Yes.
It is a biological asset and should be accounted with in line with IAS 41. But when our motive is that this biological asset, too, we don't want to sell them. We want them to be bearing fruits. We want them to be giving birth. Although we are not the owner of the life, we don't know when they are going to die.
Yeah.
So it makes sense for us to present them as a non-current asset. As a non-current asset. Because anything that you want to sell in line with IAS, or anything that you can sell, it is an inventory, which should be in current assets. But since we are not selling, we want them to give birth to be a non-current asset. But it is a biological asset. So that is it. That is it. So that's IAS 41 for us. Please, let's try and I'll try and send the Excel tomorrow, Sha. I'll try and form the Excel and send it. So that is. Oh, I said it last week that you should remind me. I want to send question. You did not remind me.
Yeah, reminding you now.
Yeah, now remind me. He's not remind me. Oh, I should send question on IAS 41 too. Maybe you try.
And send it now. Let's give it a try. Let's give it a try. Yes, it's good. Send it and let's try it. I ask you a question, or maybe we'll talk about it later. So
yes,
maybe you listen to my message.
Yeah, I'll check your voice notes. Okay. No.
Which question? Let us share. Let us hear it too.
It's already late, so let Musa Taufik go and rest for the day.
Thank you.
So
thank you.
Or maybe on Saturday I'll bring it up again. It's about the last it's about IAS 40. Yes.
Mr. Taufik. Mr. Taufik.
Yes, ma'am.
That's our group.
Yes,
we can make it, we can talk now. We should allow us to
we can talk now.
We can't talk. You made it admin only.
Really?
Yes, we
I
can't
forgot.
talk.
I forgot to.
Yeah, so that we can be asking questions.
You don't want us to be.
Yeah, so that
I forgot. So that's it, Sha. That's it. I think we can talk. I'll change it so that you can ask questions, you can relate.
Yes. So we should be able to relate.
All right.
Thank
No
you very
problem. All right. All right.
Let's expecting the question.
No,
and you too.
Yeah.
Thank you. God bless you. Good night, everybody.
Good night. Take care.
Good night. Thank you.
Yeah.
Good night.